Welcome to the Banking with Life podcast. I'm James Neathery, your host, and I'm just as excited as I can be to have my friend Kayur Shah on today. He's a client. I consider him a friend, although we've never met personally. But I think that you'll find him very interesting, and thanks for listening. So, Kayur, say hello.
Hello, James. Thanks for having me on today. Really appreciate it.
All right, so here's kind of the background. You know, it's a casual conversation. And Kayur, I want people to hear who you are for several reasons. And I'm going to give the background in general, but I want you to share with us who you are. What I see, the potential value that I see is that you're legitimately a cool guy. All right, very interesting. You're family oriented. You have some experience with real estate and family experience, and I think that's a very cool thing. If I could say that you and your father do some joint work in real estate, and being an engineer, you're pretty analytical, and of course, very intelligent. But you specifically, we all do. Once we're exposed to the idea of becoming your own banker, the infinite banking concept, we all go through whatever. We all have our own kind of a thought process and how we go through even vetting this idea and making the decision to or not to do something. And I think that because of who you are and your background, it's extremely interesting. But I don't want to tell your story. I want you to tell us. Okay?
Okay. So like you said, James, I'm an engineer. I've been working in the defense industry since 2005. I started as a student intern while I was doing my undergraduate degree. I got hired on full-time with the Defense Threat Reduction Agency after I graduated. And our mission is kind of to counter the threats of weapons of mass destruction to America and our military and allies. So after I graduated, I rose up pretty quickly within my organization. I was in charge of a lot of large projects pretty fast and moving up the supervisory and management chain. So it worked sent me back to school to get an MBA, and then I completed that. And now I help oversee and manage a division within our R&D test and evaluation department.
Can you even talk publicly?
I don't know how much life insurance you have in force, James. I might have to kill you.
Do you work at Area 51 or something like that? Undisclosed location. How's that?
Yeah, we do a lot of cool projects. It's interesting. The work's really neat and it's different, and so it's cool things.
Right. So are you an IT guy? I mean, are you like flying drones?
No, I'm an engineer, so I'm in charge of this engineering projects. And
okay. I think that's cool. So you were exposed to the infinite banking concept when? How did all that happen? Did you just hear about it over the water cooler?
So it was a long process for me. At first, I was kind of the camp life insurance. Why would I even want life insurance? So I consider it. It's kind of tainted against it. And my first experience started probably in my mid to late 20s when I had my first child. And my father had a life insurance financial person he'd been working with throughout the years, and got wind that my dad became a grandfather. And so he started talking to us about policies on myself and my children and whatnot. And he explained some good things. Some of it made really cool sense about, he didn't fully explain the loans versus surrenders and cash value access to the policies, but he did enough to get my interest peaked. And then they couldn't answer a lot of my deep questions, and then he'd get some illustrations out to me, and it looked like it took forever to build up cash value. I said, well, it sounds kind of good, but my questions aren't answered, and it kind of looks like it takes a lot of time for it to actually be fruitful, and maybe not for me. So
how long ago was that?
That was probably almost 8 years ago, 7, 8 years ago. Okay.
So it's kind of your first exposure to life insurance.
That's correct. Yes.
I got it.
And so, so I kind of stayed away from that. I did my other investments and other things with my finances after that. And, recently I'd say about a year ago now, I don't know, Google's very smart, right? I just do some real estate and kind of look at some financial things online, and they kind of recommend things for you based on your search history. Right. So I kind of threw this across my desk, this IBC concept and stuff, and I didn't really think too much of it at first, but it kept coming back. So I looked into it a little bit, and it started making sense to me. So I called that same agent back that worked with my father for many years. Hey, look, now that I was a little more educated, more smart about it, and kind of tried to do see what he could do that. And he did better. He had a much better policy and things, but still couldn't really answer my questions and didn't seem like he really grasped the concept.
So when you discovered the infinite banking concept through Google and then went right back to, the known, or the an agent you had a relationship with, and he didn't know what you knew, did he?
Yeah. I mean, he was more focused. He valued more the insurance side of things versus the banking side of things.
Yeah. And I'm not, I mean, that's pretty typical, pretty normal. We're the life insurance industry sure doesn't, I mean, they didn't create the concept. They didn't come up with it. They don't train their agents. They don't educate them. So, I mean, I'm not disparaging him in any way. I don't mean that, right? I'm just saying the life insurance industry didn't come up with this concept. They need to be taught. They don't understand, in my opinion, the power that they have. But I don't want to sidetrack you, young man.
So after that, I tried, I prefer to do business face-to-face and meet the people I work with. And so I reached out to a few different agents in town and kind of got the same story. And everyone's trying to push me towards these index universal life policies. And they weren't really listening to what I really wanted and kind of giving me what they're used to giving other people, right? So
you walk in and they have a product just for you, right? But that's pretty common as well. Number one, the agent didn't listen. They weren't listening to what you wanted. But they've been all trained up and geared up with this index universal life, so they had one for you, right?
Right.
And I'm just commenting.
So at that point, I thought, okay, maybe this is a great concept, but maybe I'm not going to take advantage of it because I can't really find a way to really do it smartly, right? I need someone to kind of help me who knows more about than I do, right? So then I said, okay, well, I found all these videos online and things, and maybe I'll reach out to the one that kind of which was your videos, and I saw you had a relationship with Nelson Nash, and okay, went some credibility there, and I reached out to you, and we had some long discussions, and basically told me you're not going to work with me until I read the book.
And you bought a book, didn't you?
I bought a book. Yeah. And so from there we have, another couple of months worth of refining and discussions, and kind of helped finally, found somebody who knew more than I did. Right. And so that was a good thing. So I didn't really know much about it in the first place. And we came over a few months of discussion and kind of refined a policy that kind of works for me.
Right. Well, you made that sound so easy. It seemed, not that it wasn't easy, but I remember we had a phone call, I think last fall. So this is July of 2019 as we're having this conversation. But I think you and I had a phone call. It was a good phone call. I think all the phone calls I have are good, but the best ones are, in my opinion, just cool people that you want to talk to, intelligent, and legitimate and straightforward. They're not no ulterior motives, I remember talking to you. You were a young man, intelligent, your legitimate questions, and you were really just trying to search, trying to figure out or vet this idea. So I remember that phone call because I was driving home. I'm like, I show up early and I leave late, and I'm got a phone sticking out of my ear on my way home. All right, so then you bought the book and probably a starter pack DVD. I don't know. Have you ever watched the Banking with Life DVD?
I have.
A shameless plug, yes. The executive producer of that. And then we had other phone calls, right? So do you remember how those went, or?
Those went well. I mean, I think, first we started about the overall concept, then we got into the mechanics of life insurance, how it works. And that kind of helped ease my, initial preconceived, perceptions of life insurance. And I still had the urge is, what am I doing here? Am I really going to invest in or use this life insurance as a vehicle to do this stuff? It just doesn't, I don't know anybody else who does it, right? It just sounds kind of crazy.
Right. Yep. You're the only one. Were you, it seems to me that I remember you were very analytical as far as numbers and illustration, because the concept is the concept. And I know that you got the concept and how it could, apply in different things in your financial construct, real estate, or, you're pretty active and this is not the only thing you do in the financial world. You don't just buy life insurance, right? I mean, you do other things too. So, but you got the concept. I remember having conversations on the concept, which, excuse me, we do a lot of that. But I also remember you being pretty analytical, which, as soon as I discover or find out that someone is an engineer, I think I expect that, and we probably all expect a little bit of or a higher level of analytical, scrutiny.
Yeah, it's an engineering background, it's more problem solving, looking at it and okay, is this going to fit my needs? Is this going to meet my requirements? And so once I got bought into the concept, okay, now let's optimize a plan that works for me, right? And that was kind of the road we went down. Is we can do this option or that option or this scenario or and it took a lot of refining to get to the one that kind of worked for me.
Right. And so was that overall process? What is your take on that? Was it longer than expected, harder than expected? Any surprises along the way?
Well, it was longer than expected, right? And then majority of it just okay. Overcoming the discomfort, you kind of have like, this is kind of new, this is kind of out there, I don't know what else is doing it, and is really all that's cracked up to be, or is this some sort of sales gimmick or whatnot, right? And so trying to fight through that and kind of say, okay, no, this makes sense logically, this makes sense, the numbers make sense, the process makes sense. So getting yourself comfortable with the idea and then going forward is probably the hardest part, especially because you can't talk face to face here where I'm at with anybody. And so trying to do it over the phone, and it works, but it's different, right? And you work with people face to face in long distance.
Well, let me ask you: if we had an office, a video tour of our office and all the team members, would that help? Being someone long distance, would that help you?
Sure. The video chats helped really a lot. I think that was very useful.
All right. I'm just saying we have a lot of clients, across the country, and we haven't had the opportunity to meet them face to face, but I look forward to it. Because in addition to that, I mean, when someone comes into our office and, we still do meet a lot of clients in our office, they get a tour, right? Julie meets them at the door and introduces everybody and takes them all through the building, all the offices. And, you don't get that, if you're, 5 states away. So we thought, and we talked about, and it's actually on the production board, to shoot a video that where Julie's, giving the tour that everybody would get that comes in here. So I'm not saying it would make or break, a decision, but that wouldn't hurt, right? I mean, it's not like we're not easy on the eyes. I mean, so.
No, I think that'd be very helpful. Yeah. But going back to your question about, how long and hard, the hardest part is every week I learn something new, right? And I had to factor that back into my decision-making process, right? Like I didn't know the mechanics of how life insurance really worked to begin with, right? And so learning all that every week, I kind of learned something new and kind of had to reevaluate, okay, how do I want to approach this now?
All right. Did going through the process of, seeing if it makes sense, engaging with us and me, our office, surely you kept searching online videos and what have you, and can you talk to that or speak on that at all?
Yeah, I mean, I think I saw a lot of content from a lot of different people, and it's hard to trust what you see on the internet, right? I mean, who is telling you the truth, or their version of the truth, and which fits well with me, right? So
their version of the truth. I like that. I mean, if we pulled up the internet, I mean, we can. It doesn't matter. Google and print, YouTube on video. There's a lot of good stuff out there, but there's some stuff out there that shouldn't exist, in my opinion. I mean, it's like a rabbit hole of wasted time.
And that's the hardest part from the layperson is filtering through that and kind of understanding what is worth listening to and your time and what is not, right?
Right. I see an awful lot that it winds up with third party calculators, illustrations, software, and then even life insurance company illustrations. It's very hard for the consumer to know apples, or to be able to know how to compare apples to apples. And it's difficult. So it's almost like, God bless you, you're on your own. So did you see any of that out there, or did that?
Yeah. I mean, there's always, the rush to call our office, and we'll start working right away and see what we can do for you, right?
Call now. There's a deadline, right? You're going to have a birthday tomorrow. We got to get it today. All right. So, you went through the process, made the decision. I think the best one, you became a client of ours, and we're excited about that. So here we are. This is July. We met or originally spoke last fall. Tell us, what are you doing? What have you done? After you've gone through the process of learning, vetting, and making a decision of what is right for you and your family, let's go beyond that point. What's it look like? How's it been? What is it?
Okay. Well, I think for me, what really drew me to it was the efficiency of the dollar, right? And the dollar is doing multiple things. That will kind of stick out to me, right? Using this system or this process, you have a place to store your savings, right? Until you find an opportunity to deploy it on. You have a place that reduces opportunity costs. So, so typically I was a cash buyer, so this kind of helps me with there when real estate deals take longer than expected. The flexibility when I leverage it finally to pay it back on my terms is, helps in my personal life and family life. And the fourth thing, is the life insurance, which I never really valued until after I bought the policy.
Yeah.
And so at first I wasn't really I didn't care too much for it. I had enough of that to take care of my family. And I started thinking about it, now I have this tool where I can use stuff while I'm alive and enjoy with my family, still leave behind a substantial amount for my future generations. And the last thing I think is it's just a system that I can pass down to my future generations, which I think is good and valuable, right? I think, I have a lot of respect for my father. He immigrated to this country, did great things, and set us all up for success. And my kids and grandkids, not as close to that. They won't see that what took and sacrifice and hard work took to get there, right? And so giving them a system of how to best take advantage of the opportunities versus giving me a pile of cash, I think is a better way to go than, young men in their 20s might make most decisions.
I'm glad you said that. Nobody wants death benefit, and it's very easy to discount the value of death benefit, especially when you don't have, much or any. The closer you get to mortality, the more important it may become. And then if you are uninsurable and can't get it, the value changes drastically. It's like if you wanted something and you can't get it, it can kind of bring a little reality and I see in the big wide world of the infinite banking concept, there's no question that the focus or a major focus is on the cash value. But that's really once the need for death benefit has been solved. And although you said, well, I have some, at work or what have you. And, who gets up and wants to go buy a bunch of life insurance, right? Now, who gets up and wants to talk to a life insurance agent,
I think about the concept was, if it was just a standalone product, I probably would never purchase it, right? But since the dollar, that's just I had a bonus for me, right? The dollar is doing that in addition to what else is doing for me there.
Right. And you can't buy life insurance without a death benefit. So when you buy or participate in the infinite banking concept and you pay high premium, high cash value life insurance, it comes with a death benefit. And you will, in my experience, and I've done this over 28 years, 15 in the infinite banking world, you wind up with more death benefit at natural mortality when you solve for cash compared to just buying death benefit, right? And that's amazing to me. I learned that, right, after a few years of practicing the infinite banking concept. Now, why didn't the life insurance companies tell me that as a life insurance agent 28 years ago? It's surely they know, right? Surely they know. And I don't want to be too harsh on them, but they deserve it. That's amazing to me. So if I structure a policy for cash, right, and I'm buying the least amount of death benefit, right, to make the policy efficient, and that's after the need for death benefit has been solved. So I'm just structuring a banking policy, trying to get as much cash in there as possible and have all the premium go to cash as soon as possible without violating the structure, the integrity of a structured policy. I'm going to wind up with more death benefit at natural mortality. I mean, it's like drop the mic. Why isn't everybody in the world doing this? Why doesn't everybody know this? Why doesn't the financial guru at whatever Wall Street, whatever position that they do or expertise they have, why aren't they aware of that? Just, I digress a little, but that kind of triggers me. It ticks me off. It's, I don't know why they didn't, other than they didn't know. And the life insurance companies didn't know, or they would have told us, trained us. And shame on them for not knowing. So anyway, so now you value the death benefit. Now that it's in force, you have a family, it kind of makes sense, doesn't it? Makes you feel good and feel better, it's smart, it's intelligent, it's financially correct. And you kind of mentioned it a little earlier, you get to enjoy what you've accumulated and the income that you create over your lifetime and leave something for the next generation, and I think it's cool. Your father came, led the way, you're carrying forward and continuing. That's what family's about. It's like, be a leader, do the right thing, and teach the next generation. So I think that's cool. What else? What else comes? Were there any surprises along the way? Is there any aha moments, or like, wow, I didn't really think about that, or did you get angry along the way, disappointed, or is it just
Well, I think with so much information and so many different ways to skin a cat out there, you get kind of a little bit of the analysis process, right? Am I doing the right thing? Is this the way to go, or that the way to go? And so I think I ran into a lot of that. And I was surprised actually how fast I started using the concept. I didn't think I'd be using it for a couple of years till I built up some more capital in there, but I need to buy a vehicle, and so I used the policy to do that. And so it's been actually a lot faster than I expected.
Were you going to buy the vehicle anyway?
No, it was just somebody hit my wife and she was driving a vehicle, and so we needed to buy a new vehicle.
Well, because you were going to buy a vehicle anyway. If you had to replace it, you were going to do it anyway, right?
Right, but we were a few years out needing one. Just kind of sped up our decision.
So that was kind of a surprise, using it faster than you thought. How was that, easy or hard, or just another learning curve, or what was that like, accessing your capital?
Oh, that was pretty easy. I got electronic funds into my account right when I needed it, and I used that to finance myself.
Right, and then you set up a loan repayment.
Yeah.
Stealing peas, are you? So I'm not confident in that answer. Do you have a loan repayment set up?
The whole point is unstructured. I can pay when I want to, right? That's
exactly right.
Right.
So
I don't have a structure per se, and the beauty of it, I can pay more now or more later, and that's kind of what I like about it.
Control. What's that worth? And can you put that on an illustration?
No.
The value of that control. Yeah. So do you have any deals in real estate? You doing anything there that you are comfortable talking about or sharing, or what's that look like?
So in the last few years we've been kind of developing some vacant lots, and that's been working out pretty well. So I'm waiting for some of those deals to close out and look for the next one. I will start using this policy to kind of help in those endeavors. I think it's going to really help again with the opportunity cost of outlying capital for a long period of time, and also the flexibility of paying back whenever I want to and having windfalls. So I think that will help in the future. And also just adding a little bit of velocity to my capital. I think with this system now, I can, in the future, probably turn out more deals more often.
And why is that? Because you have access to the capital, or why would this give you the ability to do more deals?
Well, because I think I've always been a pretty good saver. So as I'm going through and replenishing funds, I don't need to wait for one deal to replenish the funds in the policy and to use it for another deal, right? So I can just keep moving through my funds a little faster, not worry about the opportunity cost. And
right. Whenever, in the example of vacant lots, did y'all just finance them with cash, or did you, get third-party lending?
Yeah, so that's what, I think I've heard you say this before quite a bit, is opportunity seeks capital, right? And so the deals really happen because between me and my partners was that we had enough capital to make it happen, right?
So they appear, don't they? The opportunities will track capital down.
Right. So, but the drawback was, okay, you can deal with permitting and construction, that kind of stuff, improvements. There's always delays, right? And so
government regulation,
the unknown of, how long would I have to keep this capital, large sums of capital out there. And so it's, what else could it be doing? You're always wondering, right?
Right. It's a FOMO, fear of missing out.
That's like right.
That. All right. All right. So what else? What else is going on exciting with your system? It's relatively new, or is that right?
Yeah, I've only had it for a few months now, so I think it's back in March is when we finalized it.
Okay, and so you've already purchased a car with an unstructured repayment schedule, but you're in complete control of that, and you are a good saver. There's no question. I mean, you're highly disciplined. You're no question, and then you're still looking at opportunities in real estate. Is that fair to say?
Yeah, I think right now, our family's kind of outgrown our homes. We're looking to expand and buy a new home, not for investment, but just for us to live in. So this will also be a tool we can help in that endeavor.
And then you've it's been a relatively easy or painless process, a little bit long. There's a lot of it's difficult to tell the truth, or I say separate the wheat from the shaft out there. You got to really do your homework, vetting. If someone listening wanted to continue their vetting, what would you encourage them to do? How would you convey to them what should they do to learn, more?
I mean, I think trust your instincts and logic, right? I mean, if it sounds too good to be true, it usually is. So keep probing, keep asking the questions, work with somebody who can answer your questions, right? Not kind of steer you in this direction or that direction. And, do the best you can, get educated, read the books. It's hard. I mean, I'm not gonna lie. There's so much out there you don't know when you're fully done vetting it, right? So, and at some point you gotta make a decision, right? You can analyze forever and forever, and then you never do anything. So you gotta.
From the engineers, from his lips to God's, ears, because it really is all conversation until somebody writes a check, right? But you do want to make a good decision. There's no question. Did you see? Did you experience that things appeared to be too good to be true? Did you experience some of that or see some of that while you're doing your homework and research?
Like I said, initially when I first got introduced to life insurance, that first go around about 7-8 years ago, I think I was being told the great parts without the trade-offs, right? So it's all sounded too good to be true, and so in that time, that's what turned me off for many years.
Yeah. All right. So what else would you impart with us? What would you, the listener, if they're interested in learning about the concept and vetting it, they should do their homework, go online, videos, buy some books.
Yeah. I mean, I think the videos get you so far, right? And there's so much out there, right? Who do you listen to, right? And I say, talk to a couple of different advisors who know the concept and can help you and kind of help you fit your needs, right? And they structure the policy for your needs, not necessarily what they're used to structuring.
Yeah. But how would they know? How would someone know? After a conversation, I mean, did you talk to other advisors?
Yes.
While you were looking? So, I mean, how do you know? If somebody, how does the consumer, how would they know whether someone is structuring it for their benefit or for the client's benefit?
I think, when you start having the conversations and you start realizing that that agent's recommendations actually help you or open your eyes to a new way of looking at it, actually benefits you, right? That's a good sign, right?
Right.
I mean, you don't know. Most people don't know how insurance works. I still don't know the full mechanics of it, right? And at some point, it's take a little leap of faith. And
so you vetted the person and the companies, and because illustrations, they all look. I mean, I love the idea, the really the method that the life insurance industry coddles and creates for the life insurance agent, the financial professional. It's here, go construct an illustration, and then you compete, with the other company or the other agent, and illustration to illustration, and the consumer really doesn't know what they're looking at because they don't know the construct, good or bad, and the ramifications of a particular structure. So, we start looking at life insurance illustrations. One may look really good in the first year or the second year or what have you, but it's that 8.5 by 11 sheet of paper that's printed that has all the numbers on there, doesn't necessarily show what the outcome's truly going to be. So
I think also going back to your question about, what would be good to learn about is basically how a policy works and all your flexibilities you have with the policy you're trying to get into, right? What can you do and what can't you do and what's guaranteed? I think those are good important things to learn.
I think those are very important. We, not being an engineer, and not being an overly technical guy, we probably spend too much time in our practice focusing on the contractual rights that an owner or an insured would have and the contractual obligations, the difference. And then we spend probably, I don't want to say too much, seems like we spend too much time, but we spend a lot of time on the structure of policy, why policies are structured the way they're structured, and why policies shouldn't be structured a particular way. So how it's structured and why it's structured the way it is.
Yeah, so I think on those same lines, what was hard for me was, illustration shows you a set of numbers, which is good to get you a general idea, but it doesn't show you what each different policy has guaranteed versus what they allow now and in the future, right? It's not everything's guaranteed with what they allow you to do in the future. That was a big sticking point for me when I was going through these. And also for the consumer is learning all these different riders, so many different terminologies and how these different ones work and things. And so that can get kind of confusing and can kind of, well, this company does it that way and this company does it this way. What's pros and cons of each? And so I think that's a big learning point when you get into this concept.
Right. It is. And they're important. You got to make the best decision for yourself, for your family, and even if it makes sense. I mean, if you're going to put a lot of money anywhere, there's a certain amount of vetting that needs to occur. You can think about, I think about often, it's like 401ks. Everybody's putting their money in 401ks, IRAs, or whatever. And we don't think much about that as, the all-American individual. Everybody's doing it, so we put a substantial amount of money into IRAs, 401ks. I call them government plans or qualified plans. It's easy to do that, and most people don't understand where they're putting their money, what it's doing, what it costs, and all the ramifications of putting a lot of money in qualified plans. But man, you mentioned the word life insurance, and then it's like, oh my gosh, we know that's the worst place in the world to put money, and then it's almost, I don't want to say over scrutinizing, but it really gets to the point sometimes where we're, swallowing camels and straining at gnats. But you do have to be able to vet the concept, the idea, the company, whoever you're working with. And of course, if you're smart, you'd work with us in our office. I mean, I know it's a shameless plug, but.
So we talked about my experience, what, in your experience, working with a lot of people, where do you see that consumers have the least amount of knowledge where they should probably bone up on before they move forward?
That's a great question. And it goes to earlier that you mentioned concept. If you don't understand the concept, the details do not matter. And if you do understand the concept, the details do not matter. But beyond that, the details, I know they're vitally important because it's your money, your cash flows, your wealth, right? So concept is most important to me, or I believe that. That's what I've come to believe. And then beyond the concept, it's structure. You've got to understand, the owner has to understand their contractual obligations and then the contractual rights and the structure. It's like anything. If I'm going to put a lot of money in any asset, I want to know that asset. I want to know enough to manage that asset. I don't want to be dependent upon the salesperson, or not that there's anything wrong with salespeople. I don't want to be dependent on anyone when it gets down to it. I want to be free and independent. So if I'm going to put a lot of money into anything, I want to have a good enough understanding and a high enough comfort level to manage and own that asset. Right? I don't want to be dependent on the life insurance companies. I don't. So, concept and then structure. That's what I think. And thanks for asking for that question.
So then, where do you think people get hung up on the concept? What's their? Is it just a life insurance, or is it?
Well, once they get past the word life insurance, right, and it seems like the younger people have an easier time doing that. I'm 56, my generation, we were brought up that life insurance was the world's worst place to put money. But our grandfathers, prior to about 1930s and 40s, it got worse after the into the 50s, 60s, and 70s especially. Prior to, let's just say the 60s. It was very common for people to put a lot of money into life insurance. Right? Then the mutual funds, they came out in the late 30s, and then, the Keel plan in the 80s, the retirement plan, the 401k Keel plan. It moved even after the war, the Second World War, into the 80s. The shift, became Wall Street is the only place to put money. And then all these qualified plans are created, and so the older generation, grandfathers, great grandfathers, they didn't have this opposition built in of or to life insurance. That got, I think, came into effect between World War II and the 80s, that life insurance is bad. Wall Street's a place to put your money, and don't think that that's not intentional. There's almost a battle going on. If you don't put your money in life insurance, it's going to, go to Wall Street. Or if you're going to put money in life insurance, it has to come out of Wall Street. So those two entities, they compete and battle it out with each other. So the younger people, in my experience, have an easier time getting past the word life insurance. They seem to be much more open to thinking outside the norm. And so when they're exposed to this idea, they don't automatically shut down in their thinking. They may even be intrigued and it's like, let's look at it. And then, so once you get past the word life insurance,
but then on the same lines there, what about, the cost between term insurance and whole life, right? I think people, that's a sticking point for people, right?
Yeah. That's early on. People most of the time they get past that before they ever read a book like Nelson's book, or they get past it during the reading. That whole construct, that argument is over 200 years old, term or whole life, right? And I say often, I believe it, that as a society or a civilization, we have about a 70-year memory, right? And then we have to relearn everything. We can't remember past 70 years. So that old, very old argument, our grandfathers have forgot that, and we've got to relearn that. But then, two, the term promoters in the 80s and Wall Street colluded, and then they went crying to the Congress, and they said, and all of this is public information. The transcripts are public, the video is public, a lot of the video is public. Whenever Wall Street and the term promoters are beating up the life insurance industry, that life insurance is a loophole for the rich. You should buy term and invest the difference, or all that. Ralph Nader was involved in that. The consumer protector, life insurance is bad. You should buy term and invest the difference, which is, like I said, a 200-year-old argument. But two, going into the 80s, that's where all the MEC rules came. Right? Life insurance was scrutinized, and it was determined, this is too good. This is, like I said, a loophole for the wealthy. So they put the limits. Congress put limits on how much cash value you could have. They created the MEC limits. So now there has to be a relationship between the death benefit, the cash value, and the premium. And if you violate those limits, then the IRS taxes life insurance like an annuity. So does that answer your question so far? I mean, I don't want to, go on and on, but You got to get past the word life insurance. You've got to get past term. Term is what it is. It's a specified period of time. You get a death benefit. The cheapest way to buy death benefit, no question about that. But whole life is, it's a higher premium for the death benefit, no question about that. But it's permanent too, right? It'll be in existence if you pay the premium at age 120, where you can't go buy a term product age 100 or 120. So after you get past word life insurance and you get past term and invest the difference, a very common question too that should be addressed early on, or somebody has to make sense of, is what happens to the cash value if I die? Right? That's a very common question. And so I love questions, and I really love sincere questions, legitimate questions. And I think that one is used by the talking heads in the financial world. The mean life insurance company keeps your cash value if you die. They only pay you the death benefit. Well, let me tell you what happens to and I know I'm asking that question, right? But that's a very common question. Let me tell you what happens to that cash value when you die, right? In my example, you have a $300,000 death benefit. You have a $100,000 cash value, and you die. What happens to that cash value? Instantly, instantaneous, immediately, it grew to the $300,000 in death benefit. So what happened to the cash value? Well, what is a cash value? It is the net present value of a future death benefit, right? It immediately grows to the face amount. And then let me pose it this way. You're in real estate, right? You own a home. Let's say that your home is worth $300,000 and you have a $100,000 in equity. You sold your home for $300,000. Well, what happened to your $100,000 in equity? Did the mean real estate agent keep it? Did the real estate lender keep it? What happened to your $100,000 in equity? Right? It was part of the sell price, wasn't it? Part of the value of that home. So, but other than that, then for the consumer looking, they've got to deal with, wrap their mind around, understand the power of policies, life insurance structured this way. You get past the term and the whole life or permanent, the cost of insurance and all of that. It's understanding the concept. What are you doing with your money anyway? Your money must reside somewhere. It needs a primary place to reside. And then what kind of operating accounts do you use? You may have more than one structure. You may have LLCs, partnerships, whatever, business. Your money is residing somewhere and it's operating from this place. So when you have high cash value or a lot of cash value in a life insurance policy, it really becomes an operating account to do what you were going to do anyway. So it takes a little bit of thinking. It's not this concept is not for the individual that just wants to, put money up and forget about it. Can it be done? Yeah, you can put money in life insurance and then take passive income in retirement, but it's much more than that.